Anurag, you've had minutes to look through these numbers. What is your first take here? Because it seems like the market is a little bit undecided.
It's all driven by FX, largely from our side. When we went into the quarter, it was about a 200 basis point headwind. Now it was over 400. I think next quarter is going to get even worse, somewhere in the 600 plus range. So I think a lot is driven by the by numbers that are not actually, telling about the economics of the business. But overall, I mean, I'm happy with them. I don't have a problem with what Microsoft did today.
Talk to us then about the numbers that really matter, Anurag. What are you watching in this stock? What are the numbers reported today that are most meaningful for driving performance for this company?
So I think the biggest thing is going to be guidance, which is going to come on the call, especially given that we should see, slowdown in almost all the categories that they operate in, largely as a function of very tough comparisons from a very strong 12 months ago. Because one of the things that we have seen that since November, we have not seen 2023 estimates come down even, slightly for Microsoft. I think we need some adjustment there. From our side, I think guidance is going to be most important.
Overall, how much do you think they'd already warned us about? When it came to the dollar impact, for example, they'd already steered us in the direction of perhaps slowing down hiring growth. What sort of gauge are they in terms of business sentiment, consumer sentiment out there at the moment, Anurag?
So I think from an FX point of view, things get worse, or the dollar keeps on getting stronger almost every day. So I think they will have to, they plus other tech companies will need to start updating more in the mid-quarter going forward. As far as their core business is concerned, PCs are weak or should be weak over the next 12 months. The areas where we still see strength would be in cloud, would be in Office. And, those are the two areas there where we think things are going to be still very good, but the other areas are going to get a little softer.
And Anurag, let's talk a little bit more about the cloud business, because revenue in the intelligent cloud arm of the business came in a little bit light. I know that that's something that you had highlighted in your research to watch. How robust can sales growth overall be going forward if cloud continues to come in a little bit light?
So one of the things you want to think about is there are two things that happens in a cloud business. One is when workloads get migrated from a local on-premise system over to the cloud. And the second is usage based on economic activity. It's the second area that gets weakened when economic activity slows down. And we saw that during COVID as well, that their cloud business slowed down as well as Amazon's at that time period. But what the fun part was, the year after that, it saw a strong rebound. In fact, growth rates improved. So whatever loss we see this year, we think it's going to be a major bounce back coming in next year.
When you look at margins that this company is posting, Anurag, it just seems like this company is somewhat bulletproof, frankly, relative to the rest of tech stocks, relative to the rest of the communication stocks. What are the areas within the margin that you think are most vulnerable?
Well, I think they should see some compression in margin because of wage inflation, because of costs. Because unlike some of the other software companies, these guys don't spend as much on sales and marketing. Just to give you some context, their sales and marketing as a percentage of revenue is about, let's say, 10, 11%. For a company like Salesforce, it's above 40%. So they have a lot that they can cut, but not so much in the case of Microsoft.
Mm-hmm.